The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
There is a new hotel REIT that has popped up on the Growth and Income radar screen. Our Growth and Income strategist, Todd Bunton's here to talk about it. It's actually the Ryman Hospitality Properties. RHP is the ticker. Now, new for you because you've talked about a lot of hotel REITs, but never this one. But many people may know the Ryman Group from being the owner of the Grand Ole Opry down in Nashville.
Yeah, that's their most famous property. They still own and operate that. It's been around since 1925, or at least the radio broadcast for the Grand Ole Opry.
Yeah.
They still own that radio station, too.
Really?
Yeah. But they have 4 resorts across the U.S. They're all managed by Marriott now under the Gaylord Hotels brand.
Yes.
So they have a property in Nashville, like you said. Also Orlando, Dallas, and one in Washington, D.C. Again, those are all actually operated by Marriott under the Gaylord Hotels brand name, but the company still receives benefits from an improving hotel industry. So the higher occupancy rates we've been seeing across the industry and the higher room rates, that's all been benefiting RHP here. In fact, they just delivered a very solid fourth quarter beat in late February, driven by higher occupancy rates, higher room rates, and that drove RevPAR, which is an industry metric, revenue per available room, up by almost 10% last quarter. So very solid underlying fundamentals here. The company, actually, a little background, they only converted to a REIT in 2013. So that's when they changed that, and now they started to pay a very solid dividend, which I'll talk about in a second.
Yeah, it's a healthy dividend for a hotel REIT.
Yes, it is. If you look at the earnings momentum first, though, you can see estimates have been steadily rising after that fourth quarter beat. Analysts unanimously raised their estimates for both 2015 and 2016, sending it to a Zacks rank of 2, which is a buy rating. It's very good on the earnings momentum front. And in terms of growth, analysts are expecting good double-digit growth in funds from operation over the next 2 years. As long as the hotel industry continues to improve, this company should continue to benefit. And then, of course, on the income side, they pay a dividend that yields 4.1%. Very, very juicy dividend. The company actually increased that by 18%. With their fourth quarter earnings, they announced that big dividend increase. And you can see, along with other hotel REITs here, Chesapeake, Chatham Lodging Trust, I brought those with me. You can see pretty good dividends across the board, reasonable valuation, and good earnings momentum. But RHP kind of has that perfect combination of all three, which is why I like it here. You can see they trade about 12 times forward funds from operation. From an enterprise value to cash flow perspective, they're about 18 times. Both of those are discounts to the industry median. And then in terms of REITs in general, I hadn't talked about them for a while, one of the reasons being interest rate risk. So when interest rates do rise, these stocks tend to underperform. But in the Fed's latest statement, they did remove the word patient, but they're still going to be patient based on their interest rate projections. Once they do start raising rates, I don't expect them to increase that at a fast pace. So that should mean these REITs can still deliver strong total return potential in 2015. You just got to kind of pick and choose your stocks here.
Okay, let's talk about that dividend. Recently increased by 18%.
That's right. That's very juicy. Yeah, the company, like I said, they converted to a REIT in 2013, but they've steadily increased that dividend. Last year they increased it by 10%. This year 18%. And why is the company able to do that? Well, because underlying business is strong. Like I said, the hotel industry is seeing favorable metrics, and they expect that to continue over the next several years. So REITs are required to pay out at least 90% of their earnings in the form of dividends, so that's why you're seeing that nice march up in yield.
Yeah, they probably benefit from a two-edged sword down there. Vacation destination as well as business venue, because in that hotel property that they have adjacent to the Grand Ole Opry, there's a lot of conventions and business meetings that take place there.
Absolutely. Yep. So they're in a good spot here.
Do you own them?
I do not.
All right. Check out more stock picks and stock picking strategies on our website, Zacks.com. If you're not there already, get on over. You can link right off the homepage with Todd. I'm Terry Ruffalo.